U.S. Fed Chair Jerome Powell says inflation in the U.S. is still too high and said lower economic growth is likely needed to bring it down. Powell also noted geopolitical tensions pose a threat to the global economy. Seung-jae has more.
Speaking at the Economic Club of New York on Thursday, U.S. Federal Reserve Chairman Jerome Powell said inflation in the U.S. is still too high, and in order to bring it down to the central bank's target of 2%, it will likely require a slower growing economy and job market. Powell says although inflation has cooled significantly compared to a year ago, the economy is growing faster than the Fed had expected and could continue to keep inflation high. According to the U.S. Fed chair, in order to reach the target inflation of 2%, it will likely require a period of below-trend growth and some further softening in labor market conditions. Still, Powell refrained from commenting on the central bank pushing for higher interest rates to further ease inflation, instead saying that he and the policymakers will continue to analyze data to make their decisions.
Given the uncertainties and risks, and given how far we've come, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks.
Meanwhile, amid the prolonged war in Ukraine and ongoing armed conflict between Israel and Hamas, Powell says geopolitical tensions pose risks to global economic activity, adding that economic implications remain highly uncertain. Powell also called the attack on Israel and the prospect of more lives lost horrifying. Seung-jae, Arirang News.